And thank you everyone for being part of this. Give me 1 minute, please. Okay, if you can see my screen and if you can hear me loud and clear, can you type 1 on the chat box? Sorry about that. I just needed to fix some stuff. So, okay, everyone can hear me good. And you can see my screen as well. So I said last week that we're going to analyze 5 charts. And some people actually sent the charts that they want me to analyze. I already have 5 charts I started analyzing. Like I said earlier, I broke my screen. So the soft touch is not working anymore. I have to use my, I don't know what it's called, the cursor. So yes, but I can't use my soft screen anymore until I have to go and fix it. So let me close this and this. Let me take off all the distractions. All right, beautiful. Now let me tell you a little story of what happened to me today. In the estate where I live, we have constant power supply. Let me say in a scale of 1 to 10, I'll give you 8 over 10. So out of 24 hours, at least we have a maximum of 20 hours constant power supply. So today, my laptop battery was down. I had a 7 o'clock meeting and I was listening to the meeting with my laptop. I didn't charge it. So my instinct told me, go and charge your laptop because you have a meeting by 9 o'clock. But I was so confident that, come on, they give us light. Since I came back from church, they've not taken the light. They've not even blinked it. So I'll charge it while I'm doing the today's webinar. I know what happened. At 7:32 thereabouts, NEPA took the light. And there was no light till about 8:35. And throughout that period, I was actually panicking because my battery was barely 30%. And I know it cannot last for this whole period because sometimes we take time like 1 hour, 2 hours taking this webinar. And I was sweating. I was like, oh God, please let them bring the light. Please, please, please. Because people hardly, but I'm not sure there's, in all the estate, there are very few people that have the gen because the light is always constant. Why I brought up that thing is, in trading, never be overconfident that you know where the market is going to go. I was too overconfident and they took the light. So imagine you are in a trade and you didn't put your stop loss because you are so overconfident that it's either going to go bearish or it's going to go bullish. And all of a sudden, you're having a massive drawdown. So for a good 1 hour, there was no light. That's the same thing that's going to happen in your trading account. For a good 1 hour, you'll be seeing so much red. There'll be so much drawdown in your account and you'll be sweating like the way I was sweating because I did not want to miss out on the first day of our webinar for this year, 2021. So when NEPA actually brought the lights about that 8:32, immediately I got my charger and I powered my laptop. So imagine I allowed all my confirmation to happen by plugging my laptop, being on the good side, my risk management is everything is okay. And I started charging my laptop and NEPA even took the light then. Let's say NEPA took the light when my instinct told me charge your laptop around 7 o'clock when I started that thing. At least I would have been in profit or been I would have entered the market in a very good way. Even if there's no light, the drawdown, I'll be in profit when the drawdown is actually going down. I don't know if you understand. Maybe I've gone like 50 pips up and NEPA took the light and there's a drawdown, the market is going down and it has gone down like 20 or 30 pips. I'm still in 20 pips profit. So I would have secured my profit by having enough battery that I'm going to use in training before NEPA brings the light, and I will charge it. Rule number 1, don't be too confident when you are trading. Trade what you see, not what you feel. I see some people's charts when they say, I know the market is going to go this way. Anything can happen. There's so many things that moves this market. The economy of a state moves the market. Natural hazard moves the market. We can be doing this chart now. A market open around 11 o'clock today. And God forbid there's a bomb blast somewhere in America. God forbid it happen. You will see the way right in front of your eyes here. You see how this market will gap to the upside against USD pair. If USD pair is on the quotes area. So that's one thing that you should understand about trading. Make sure all your confirmations are correct. Place your trade and enter your stop loss. Never be too overconfident, because there are so many smart and intelligent traders that are very unprofitable because they're not disciplined. They lack discipline. They feel they know the market too well, and the market will, at the long run, burn their hands. So that's what came to my mind today, and I was like, I need to push it out for everybody to learn from my lesson. Because everything about my life is related to Forex. I don't know why. The thing happened to me, and immediately what came to my mind, I said, just imagine I was in a trade and I didn't allow the confirmation to happen. So what just happened to me is that let me show you using this chart. Or let me just draw it. Remember the way we do things. We normally wait for a confirmation. There should be an impulse move, wait for correction before you continue. But what happened to me is, immediately I saw this impulse move like this, I entered a buy. And I expected price to go. So what happened? There was a drawdown. So this drawdown, this pullback here, I will be in massive loss before this happens. But if after this impulse, you waited for this pullback, what will happen? I will enter from here. The person that wait for this pullback will enter here, be in good profit, while me, I'll be in a drawdown before I'll be in a good profit, which because I entered somewhere around here. The person here will make money, maybe like $100 before getting to me, and continue making more money. So that's why it's always good for us to be very patient, wait for all confirmations before you take any trade. Don't be like me that was too confident that NEPA was going to bring the light, and that will make me not to charge my phone. What if the transformer blew? Because there's a time that transformer will blow and there will not be light for throughout that night. We have to wait till NEPA come and fix it up. What if that scenario happened? So this class will not going to happen today. So please, 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 don't write on my screen. If I see your name, I will tell Mark to remove you. Do not write on my screen. Matt, any name I call, remove the person. Please don't write on my screen. I don't know how. I keep saying it. I'm not a technical person when it comes to all these things, so it will be difficult for me to clean it. So please stop writing on my screen, okay? I think I learned how to do this one. Let me try and clean this one. Okay, good. Now let's start today's class. I don't know which strategy. Okay, let me do it this way. Which strategy is still difficult for you? Because I started teaching the zoning strategy, then I taught rectangle strategy, and I taught the scalping strategy using the EMA crossing. So now I want to know which one you are still having difficult, because some people send me their rectangle and it wasn't pretty good. People are still trying to learn how to do it. So I don't know which one to take today, if it's rectangle or the zoning strategy. So if you want rectangle strategy, write arrow. If you want zoning, write Z. If you want rectangle strategy, arrow, zoning, write. Let me see if there's a tie. I think the arrows are winning it too. Ibrahim Z, Joan Z, just 3Z. EMA, Francis, your name is sorry, you're only the one. Everybody's saying rectangle. Okay, I'm going to do it this way. I'm going to teach the combination of rectangle and zoning strategy together. But let it don't blow your head though, because all those things are going to help you to okay, rectangle, don't worry. Well, I'm going to do everything together. I'm going to do 2 of them together, and if possible, add crossing to the chart, so it will help. It will help those who don't know about it. Okay, now this is rectangle on my screen. I'm going to delete it, then I'll start all over. I drew this rectangle 2 years ago. That's about 2019. You can see it from the chart below here. And you can see how price has been respecting it all this while. So I'm going to delete it. And I want you to give me your undivided attention. Because what we're going to do, like I said earlier, for those who started this with me, I said the rectangle strategy is about 95% accurate. But only what it requires is what? Patience, good risk management. The most thing you need is patience, because it's only done on a 4 hours time frame. You can only draw your rectangle on a 4 hours time frame. And the first rule to drawing your rectangle is 1. You need to find an impulse move. You can see this is a 4 hours time frame. And we're looking for what? An impulse move that has happened in the past, not the one that has happened in the future. You go to the past and look for what? An impulse move. Now, I drew this impulse move sometime in December from here to here. Now, I have another impulse move that I've seen that has happened in the future. But because this one is actually longer than this, let me show you what I mean. So we can still use this one. This is an impulse move from the top to this place. So if I'm drawing my rectangle, it's going to cover here. You can see all this place here, nothing has happened. Price is still going up or still coming down. We don't know what's going to happen until we draw our rectangle. But if I said, let me use this one here, I'll be limited to, if I say, let me use this, I'll be limited to only this area. What will happen in the future here, I need to now duplicate my box and put it up there. So that'll be a whole, too much work for us. So what I'll use this one that happened in the past. This one is still valid because this high here, price has not gotten to this place. So now I've identified my impulse move from the top here to the bottom. So the thing you're going to do next, after you identify your impulse move, is to pick your rectangle box and do what? From the tip of that impulse, the top of it, to what? The end of the impulse move. You can see what I'm doing, right? If you understand what I just did, please type yes on the chat box. If you understand what I did, type yes. I want us to have an interactive class. So we'll go step by step so everybody can be on the same page. Good. The first thing, you zoom out your chart, you zoom it out to the maximum where you can't zoom it out any longer. Then identify an impulse move. It could either be a bearish impulse move or a bullish impulse move. And the impulse move has to be what has happened in the past. Now, this is what has happened in the past, this bearish move from the top here to the bottom here. So you pick your trend line and draw a trend line from the top to the bottom. That trend line is to help you identify the impulse move. Then you pick your rectangle box from the top here to the bottom. So now with this one box, you can duplicate as many boxes. You don't need to start drawing or looking for another impulse move. So now we've done this. The next step is for you to pick your what? Horizontal line, identify your support level, which is what I just clicked now here. That is at the end of the box, of the rectangular box. You put your horizontal line there. You go back to the horizontal line and identify what? Your resistance level, which is the top of the rectangular box. Now I now have a range at which price is going to go either up or downward way. But it doesn't end that way. Now, within this rectangle box, there are so many pivot level here. And those pivot levels are the levels that price respects. Now you will ask yourself, why is price moving in this way that is moving? And why is price respecting all these areas like this? It will come to this way, come down. It will go to this way, come down. It will come up here, come back down here. It will go up here and come back down here. The question is, why is price respecting this place? You know, without drawing any pivot line here, you don't know what's happening in the market. But by the time I finish drawing my pivot levels using this rectangular box, you'll be surprised how price is respecting each level of our pivot levels within this rectangular box. Now, what you're going to do again is pick another trend line and draw from this side of the rectangle down to what? This side of the rectangle, at the middle, at the tip of it. You can see it at the tip of it. So the middle of the intersection between these two rectangle and two trend line, that's my first pivot level. Now I'm going to put my another horizontal line there. And can you see how price, what happened here? When price moved up here, it came back down because there's a pivot level there. You can see it here in the past here. You can see it here, how price respected it here on the left. Price broke it. It came back to retest it here. If you can look, let me change this cursor. Let me use the arrow. You can see how price respected it here. You can see it here. It came back and retested it and bounced up and did all these things, went back up. You say when I tell you that rectangle strategy is 95% accurate, but all you need is what? Is patience. So this is what price does. It reacts to all the pivot levels within the rectangular box. Now, I've gotten half of the rectangular box up, another half down. So for me to get another pivot level within this location from here to here and from here to here, the same trend line I did to get an intersection, I'm going to do it on the other half above and the half below. So what I'm going to do is pick another trend line and do what? Draw from the tip to the intersection between at the end of the box, by the corner of the box, and I do what? Drop it there. It might not be 100% accurate, but just make sure. The most important thing is find the trend line, find what? The impulse move. Now I'm going to pick another trend line and I will draw from here down to this place as well. Now I've divided the box into two. Remember, the first pivot level divided the box into two. So this is what I did. The same thing I did for the whole box, I'm doing for the half and this other one. Now you can see that I have two pivot levels, two intersections here. Now the originator of this strategy taught us only this intersection, which is this one. But while I was doing my practicals and doing more study about it, I noticed that there is another intersection, which is this one and this one. And price respects it as well. So what you will do is pick your horizontal line and put it in between the first one, which is this, the intersection between it. You can see how price was consolidating on this place. Then you pick your another horizontal line and do what? Put it in the between the intersection of the other what? Trend line crossing. You can see it there. So you can see what price was doing here, consolidating here, going up and down within these our boxes. You see how price respected this one here as well. After this pivot level, this another pivot level, price respected it, broke out of it, retested it somewhere here, came here to test it. The same thing is happening. So you ask yourself, why is price doing those things even when there is no what? You can see there's no indicator. I'm just drawing structures using what? Rectangle and trend lines. Though this is what price does. By the time you look at the price and ask yourself, why is this price going up and it turned at this particular place? It was because there's a hidden pivot level that we did not know. But rectangle strategy has taught us how to identify pivot levels, even for you to know what's going to happen in the future. because anything that happened in the past in the forex market, whatever price has gotten to the past, it must surely get back there in the future. So the same thing I did for the half of the rectangular bus up, I'm going to do it for the ones below. Now pick my trend line and do the same thing here. Draw from here to the tip here, the remaining half. And I'll pick the same trend line and draw from here to this place. Please, Matt, help me admit people. Thank you. So you pick your horizontal line and do the same thing. You can see how price is respecting every pivot levels. You can see it here now. Price broke out of this, respected this pivot level here, went back up and all that. Now, you've drawn your levels. You now understand what's happening. Now the question is, how can I enter and how can I exit this market? Now the beauty of rectangle strategy is that every pivot level is a TP, is a take profit. And also every pivot level is a stop loss. Now the stop loss for this strategy is very wide, which I don't advise. So what I do when I enter my market, now let me show you the entry part and the exit part, what I personally do. For your entry parts, using the rectangle strategy, if you want to enter the market, if you want to execute a trade, always wait for the market. If you are going bullish, you wait for the market to close above your pivot level. Let me reset this thing so we can see a better view. Now, let me start with this one. This thing happened like this. There was an impulse move here. Let me pick it right again. There's an impulse move here. You won't buy this pair until this price close above what? Your pivot level. Now you can see that this greenish, this bullish candle closed above the pivot level. So how this strategy works is you allow the market to close above it, then you take your what? Your instant execution. But the better thing is, if this market, first market close, which is this candle, you wait for the second candle to close. If the second candle close above the same pivot level, which is this one you are seeing here, let me change it to this. Now there was an impulse move to the upside, and this market closed here. You wait for another 4 hours candle to close, which is this one you are seeing here that closed above the what? Pivot level. These are pivot level, this purple line. You do an instant execution. Your TP is the next pivot level, which is this one above here. I need to shift this. Okay. If you enter this market, your TP is here, the next pivot level, which is this JPY is, which is somewhere around here. 141 dot something something something. So that's what happens with this for your entry to enter the market. You wait for candle to close above it. The candle that breaks the pivot level, which is this one that we saw, this bullish candle. This is the bullish candle that breaks and closes above it. You wait for the next candle to close, next 4 hours candle to close, and you take your instant execution. Your TP is on the next what? Pivot level. But I always tell people, that's why I gave everybody in the group my trading journal. You don't just place your trade and say till it gets to where I'm going to. No, you need to have a trading goal. If every day I want to do 100 pips, as soon as you've done 100 pips profit, irrespective of the lot size you are using. If you are using pips to count your goals, some people use dollars to count their goals. Some people say, if I make $10 in a day, $100 in a day, $1,000 in a day, I'm okay. So they just go to the market in and out. Why some people, their own trading goal is what? True pips counting. So imagine you say, I want to make 100 pips for the day. As soon as I hit my target for 100 pips, I've closed trading for that day, and I will look for another opportunity the next day. Trust me, a disciplined trader makes more money than a trader that is not disciplined. I'm saying this thing with confidence because I've been in that place. I have built 2-figure account to 5-figure, and I blew that 5-figure in less than 48 hours because I was too confident and I was greedy and I lacked discipline. But ever since I started using my trading journal, if I say I want to do $2 or 2% of my investment, of my capital, as soon as I've done 2%, I'll close for the day. There was someone in the group last week that said, oh, I actually closed my trade because I met my target for the day. So I wasn't bothered. I was impressed with the person. I don't know who, because the person, someone asked him or her, are you still on this trade? He said, no, I met my target. Though the trade is going my way, it's still going bullish, but I've met my target for the day and I closed. That is a disciplined trader. You don't have to be, if God uses Forex trading to judge us, so many people go to hell. It's very, because if you look at the scale, 97% of retail traders are not making money. Only 3% worldwide. I'm not talking Nigeria, worldwide. Only 3% are profitable. 97%, they're very unsuccessful. And it's not that the 97% don't know how to trade, but because they lack discipline. So let's assume that we enter this trade at the close of this bearish indecision candle. Let me use a ruler to count how many pips 100 pips is. Let's say we enter from here. So 100 pips would be somewhere around here. So even before this drawdown happened, you are out of the market. So you don't even need to be looking at your trade till BRT hit you on the road, or you'll be looking at your trade till you go and hit somebody's car, or you'll be looking at your trade and you fall inside gutter because you want to be seeing what is happening in the market. No, trading is just like a normal business. You place it, put your stop loss, and you go to bed. Now, I've told you how to enter. Now, I did not tell you how to do what? Exit. And I'm going to show you your stop loss, because it's very important to know how much you're willing to lose before you gain. Now, the originator of this strategy says that your stop loss will be on the next pivot level. Now, remember, the pivot level for the originator is this. I'm going to hide this. Okay, now let me delete this. I added this. Let me show you how far this stop loss is, and I don't mean myself because it's very profitable, so I don't use it. I don't use the stop loss, even though it takes, because this rectangle strategy is for position traders. If you are the type that can trade and leave it for like weeks, days, and all that, this is a good strategy for you. But I had to tweak it in a way that is going to suit me for my own risk management. Now, the originator of this strategy says, if this move happens, you see something like this, market closed above this, and you entered, let's say you want to buy this pair, and this bullish candle broke this pivot level and closed above, the second candle closed, and you entered a buy from here. Your stop loss, let me pick this so I can measure it good. Now, let's say you bought it from here. Remember, I told you your TP is this place. And your stop loss would be the next one. You can see how far the stop loss is. But it has never gotten, you hardly see where price. Let me squeeze this thing. So now imagine you entering a trade like this. Your stop loss, your take profit is here and your stop loss is here. That means you are losing $750 for 750 pips, and you want to gain 1,229 pips. That's 4:11. That's what I'm seeing here. The risk reward, you can see it here. You can see it on the screen. You are getting 4% of it. So your risk reward ratio is too much. That's for me. These are for those who have very large accounts, $100,000, $300,000. According to the originator of rectangle strategy, the stop loss is on the other pivot level and the take profit is on the next pivot level. So for me, that was what? Too high for me. I can't do that. So what I did is, after I found out that there are other pivot level within his own pivot level, just like the one I deleted, let me put it back. So even if you want to use that strategy as your stop loss, your pivot level would be this one here that I just added here. And your take profit will still be the other one, take profit. But what I did as my own stop loss is, if I choose to enter this trade here, my stop loss is on the next candle. The candle that broke it. The next candle after the candle, which is this one, that's where my stop loss will be. So let me show you with this. So imagine I entered this trade after the close of this candle. Remember, I entered here. And my stop loss will be somewhere here. So you can see my risk reward ratio, 1 to 3. Sorry, 2.2.3. Look at my risk reward ratio here. So I'm losing, I'm going out with, I'm going to lose 86 pips to gain this. You can see the pips numbers here. Even if it's almost the same way, but because this is a pounds pair, you know, pounds, their pips are actually very, very much. And I prefer, if I want to trade anything that is not good, I trade pounds, because pounds give more pips than any other, what's it called, pairs. So I prefer to use this, the candle that broke it. I'll either use the candle that broke it, this one, or the previous one here. But to be very, for your risks to not be too much, you can use the candle that actually broke that pivot level, which is this one that you're seeing here. This candle, you place your price below it, and your risk reward is better. So now you have the risk reward ratio is 5:12. So I'm willing to lose that something pips as against to gain 193 pips. So that is fair enough. That is how I do my own. The candle that breaks the pivot level, if I see the candle that breaks the pivot level, if I'm not comfortable with it, I'll use the previous candle. After that one, the next candle that breaks it, which is this one, and I put my stop loss there. Not like this down below. That is way too much. That risk reward ratio is not good for me. So this is how it works with rectangle strategy. If you must enter, wait for the candle that breaks the pivot level, which is this one that you see here. This is the candle, this bullish candle that breaks it. Remember, all this red line, all this purple line here, our pivot level. So the candle that breaks it is this one. It's not telling me that he wants to go bullish, but for me to have better confirmation, I'll wait for the next 4 hours candle to close. Then when this closes, I do what? I enter my buy to the next pivot level. But like I said earlier, instead of doing it from pivot to pivot, calculate the number of pips that you want to take. So let's assume you missed this one and this happened as well. Remember, I told you that the candle that breaks Like now you want to sell. Imagine you want to sell this pair because this candle, this bearish candle broke this pivot level, and you enter the sell and you place your stop loss above this candle. Let's say you place your stop loss here. This market will go against you and do what? Hit your stop loss. So by the time you wait for the candle that breaks the pivot level, wait for the next one also to do what? To close. If that one doesn't close below the pivot level for a sell confirmation, do not sell that pair. Since this one broke here, you are waiting for a sell confirmation for the next candle, and this thing happened. So you have to wait for the next candle to close above the pivot level. Now, this is what happened. This one closed above the pivot level. I enter my buy here. I'm going to be on a small drawdown, which is this. My stop loss is somewhere around here. This is where my stop loss will be. This is where my entry, sorry, my entry will be. I might take profits at this place. So imagine my risk to reward ratio. That's the beauty of rectangle strategy. But like I said, if you must be successful, you have to learn to be patient, because it's on 4 hours candle. For you to wait for 2 4 hours candle to wait, that is 8 hours before you can enter a trade. But it's very rewarding. When I mean rewarding, very, very rewarding. You can take your time and study it, practice it on what, even if you want to go with 50 pips, you can catch 50 pips if you are using pounds or gold to trade using this rectangle strategy. So if you understand what I just did, type 3 on the chat box before I can combine zoning to this one, because some people don't understand how zoning works. If you understand what I just did, type 3 on the chat box. For those who wanted rectangle strategy, if you understand what I did, for those who type rectangle, if you understand what I did, write arrow 3 so I can know you understand it. Write arrow 3. If you don't understand it, write arrow no. But if you understand it, write arrow 3. For those alone who said I should teach rectangle strategy. Okay, good. I love this class. It's very interactive. Oluwa Code said no. Okay, Oluwa Code, can you type what you don't understand about just type it what you don't understand so I can do a recap before I add zoning to this. I think you're the only one that don't understand it. So please, can you tell me where you lost it so I can actually do a recap before I add a zoning strategy to this one. I'm waiting for you. So the thing is your impulse points. I don't understand your question. The thing is your impulse point. What don't you understand about the impulse? Is it how to identify your impulse? Is that what you want to say? Your impulse move. Is it what you want to say? Okay, now how to identify your impulse move? Oluwa Funsho, I'll get back to you on that. First, you zoom out your what? Let me hide this chart. Now, the impulse move I said you should identify is what? What has happened in the past. The impulse move that has happened in the past, either a bearish move or a bullish move. Now, the impulse move that has happened in the past is this one you are seeing here down to this bearish move here. Now, I showed you another impulse move. This is an impulse move from here to here. But why I did not use this one here is because this previous impulse move have a higher point than this one. So if I'm drawing my rectangle, it's still going to cover up all these places. There will be pivot level here that price is going to affect. That's why I use this impulse move in the past. Let me put it on. Instead of me using this one here, let me draw it. Instead of me using this impulse move here, this one here, I use this one here because it has other stuff around it that can help me identify price. But if I just draw my rectangle from here to this place, I'll be limited to only this place. I won't see what's going to happen. That there's a possibility that if price closes above this 14162 144, there's a possibility that it can come up to 148. But if I limit myself to this, I have to create another rectangle above it. So that was why I chose this impulse move here. This is an impulse move for me to draw my what? My rectangle box. Do you understand that? Do you understand that now? Please type on the chat box. That is how I got my impulse move. Okay, yes. No, Miss Oluwale Codes. Do you understand how I got the impulse move? I'm sure you're the one that asked. Okay, good. Now, Fusion, Oluwa Fusion, you said the entry point. Now, before you can enter, you can see that I need to, let me do something. There's a way you learn how to delete. Not this. Oh, thought I could use it. Okay. I wanted to delete all this. Now, let's assume this place hasn't happened. I drew this impulse from here to here. I want to show someone that said, let's assume in this move has not happened. Okay, so I'm going to reset this chart a bit. Just give me a few minutes. So let's assume in that this place, from this level where I drew this circle, this move has not happened. The move that has happened is just this one, this impulse move, this little one here, from here to this place. Now, for you to enter your trade, so I want to get to the, I wish my screenshot, my soft touch screen was working. Okay, now, beautiful. This place I circled, let's pretend it has not what? Price has not gotten to that level. Price, this thing happened here. You can see how this pin bar came to my pivot level and did what? Closed above it. So if I want to enter, let me say this is the only candle that has happened. This pin bar you are seeing here. I'm sure you're paying attention. And I want to enter this trade. Now, this has given me, remember I told you, if you are buying, make sure that the candle is above the pivot level. If you are selling, make sure that the candle closes below the pivot level. Now, for me to confirm that this is a buy trade, I have to wait for this bearish candle to close above this my pivot level here. Now, this bearish candle has closed above this my pivot level. I will enter my what? Buy. And my take profit, according to the strategy, is the next pivot level, which is here. So if I use my ruler now, and assuming I enter this pair somewhere around here, my what? TP will be here. That's 409 pips. Let me use the position calculator so you can see both my. Let me use the position calculator. So let's assume I entered from here. My TP, it's here. Remember what I told you about stop loss? My stop loss will be somewhere around here. Now, this is a candle that's closed above it, so my stop loss will be directly under the candle. So this is how my TP is, 604 pips. I'm going to lose 164 pips if this trade goes against me. But if it goes in my favor, I'm getting 604 pips. So if you're a position trader, you take this trade and you leave it. Remember, this took how many hours before it gets to your TP? And days as well. So imagine this. But if you say you just want to do 100 pips or 50 pips, as soon as you've gotten your target, you leave the market. So now let me use another one, another impulse move that breaks. Okay, let's say you got out here. You see how this candle wicked out, hit your TP and came down here. So now, if you say you want to sell this candle. Remember the strategy says sell from pivot to pivot level. But see what happened here. This candle closed here. You allow this one to close and you decide to sell this pair down to this place. But you can see now the pair came down here. You'll be in small profits. Let's say you entered around here. You'll be in little profits. Your risk to reward ratio, you'll be in little profits here before it goes against you. That is 19 pips. But someone that did 600 and something pips, do you want to start going up and down with the pips? But anyway, let's say you decide to do it. But this was going to happen because your TP will be above this. You'll be in profit before it turns back and just does what? Hits you in your stop loss. So I'm telling you how the buys and the sells work. Now let's assume that you want to continue buying this pair. Let's say you went out of this pair and you wanted to see what is going to happen. Is price going to come back here or price going to break this? And this correction happened, then this candle went up and this one broke what? Broke this pivot level. And you decide to buy again. Remember what I told you, that according to the strategy, your stop loss will be here, your TP will be here, which to me doesn't make sense. So what I do is, if I want to buy this pair again, as soon as this candle closes, I'll pick my buy. My stop loss is on this candle here. This one broke it. The next candle that is below it, I put my stop loss. So this one will wick me out. You can see how this one wicks me out and hit my stop loss. It's better for me to go out of it than to have this large bracket, this stop loss that is large like this way. It's better it wick me out, but you can see that it still went my own way after consolidation. So now it's telling us that this thing is happening, it's going up. So if you want to buy this pair, let's assume your stop loss is what? Let's say you put it here, you put your stop loss here, which is this last low. Let's say you did it between the last low. Because you can also use the last low, or you use this same way that I'm doing it. Any which way is still good. Depends on the account that you have. But my own way, I don't go too far. I don't like risking too much. This is what I do. But if you choose to give it a breathing space, let's say you want the market to breathe. You don't want to be allowing candles to wick you out. You can choose to use the last low and use it as your stop loss. So this is the last low here, which is this one. You can choose to make this as your stop loss. Now this will be your stop loss. This will be your entry somewhere here, the close of this, and this will be your TP. You can see that it's actually your risk is higher than your reward. So that's why for me, this is what I do. I prefer to use the candle that breaks it, the previous candle that breaks it, as my stop loss. But now let me show you what your entry level now. You're assuming you entered here. This candle, this bullish candle broke your pivot level. You wait for the next candle to close. If the next candle closes above your pivot level, that indicates a buy. And you enter your buy to the next pivot level. Or you pick the number of pips that you want to use. If it's 30, 50, 100 pips, any pips that you want to use. But this strategy are for those who are position traders. Because some people, according to the person that taught the strategy, if he enters this trade, remember his own pivot level is his own pivot level is this one. Oh, I deleted something, sorry. Oh, no wonder. I mistakenly deleted this. Oh, good. No wonder, sorry. There was a pivot level here that I mistakenly deleted. So let me expand it again. Okay, so sorry about that. I mistakenly deleted this pivot level. So imagine that this happened according to his strategy, if you want to buy this pair again, this candle here broke this pivot level, this first pivot, this purple level. You will wait for the next candle to close above it. Now your stop loss is on this pivot level here, this one here. You can see price almost got there, and your take profit is on the next pivot level. But what I do is I take the candle that broke it, the next candle after the candle that broke it, I put my stop loss below it, or I put my stop loss at the next low or the next high if I'm selling. So that's how your entry and your exit level is. So it depends on how much you have in your account, then you can determine how much of a loss that you want to lose in the trading market. But if this thing happens this way, is price going to get to the other pivot level? Price will definitely get to the other pivot level, because what happened in the past will definitely repeat itself in the future. That is one thing you should know about rectangle strategy. You can see this impulse move that happened here. Price will still come to 1,480.096. So what's going to happen now? We've seen what happened in the past. Now what I'm going to tell you that is going to happen as soon as market open. You know, this is the beginning of a new trading year. Market will open tomorrow. So two things will happen. I don't know if there's going to be holiday. I'm not sure there's going to be holiday. But tomorrow is on the 4th. If there's going to be holiday in the world, I don't think so. I'm expecting two things to happen. It's either there'll be a gap to this area, the market will gap and drop down here, or the market will gap and go above my pivot level. But if anything like that happens, if the market gaps above this, you know, there will be an opening here. What I will expect that will happen is a break out of this pivot level, retest, and what? Drop. Or if there's a gap, the market will do what? Gap up to this level, breaks out here, does something of this nature, and go back up. This is what I'm going to expect that's going to happen in the market, if there's going to be a gap. But if there's not, let's say there's no gap and the market is moving normal, this is what I expect. The market will either continue, let's say not because of the new year, market will continue this way, or better still, come back down here, back to this level. It's either the market will go up here. If it doesn't break that pivot level, it will respect it and come back down, or the market will just continue downwards movement back to this pivot level. But so either ways, market always respect each pivot level. When price gets there, it must surely react. It either break, return back, or retest that pivot level. So do you understand my entry points? Oluwa Fusion Abi? Sorry, for spoiling your name like that. Please use the chat box because I need to do zoning. This is just one pair. We have about 4 pairs to go. I'll just use rectangle strategy here, then other pairs I'll use zoning to teach it. Because drawing this rectangle strategy needs concentration. Sorry, let me delete this. Okay, good. Now everybody's on the same page with the rectangle strategy. Now I want to combine the zoning with this strategy. I won't want to delete this. I want to combine it with zoning. Remember, I told you that zoning works with every time frame, but rectangle strategy is just H4. But your zoning strategy, you can use it on your H1, you can use it on your 30 minutes or your 15 minutes on 1 hour, any time frame that you want to use. It works everywhere. Price respects everything. But I prefer to use the 1 hour to draw my zone. So now go to 1 hour chart. I've zoomed out to the max. How for you to draw your zone, to identify your zone, the first thing you need to do is zoom out like what I just did, then change to line chart. Now, how to draw your zone using line chart is, first, you need to know where is the market going. Looking at the screen without analyzing anything, the market using this H1 analysis is moving upward here. So when the market is going on an upward trend, this is what you should be expect. Higher highs like this. Are you seeing it? So if you want to draw your zone for a trend going up, when you identify the impulse move, that pullback you're seeing there, you draw your zone on the pullback. You can see what I'm doing. I'm trying to use this. I'm sure everybody can hear me clearly, right? Can everybody hear me? Okay, good. So you can see what I did here. On the pullback for this bullish trend, I will pick my rectangle and draw from the beginning of the pullback to the end of the pullback. Let me do for the second one. I'll just pick the beginning of the pullback to the end of the pullback. You know, this is a line chart. This is just an illustration. I'm trying to show you what to do. Sorry, I connected my phone as well, so I think the noise was breaking. That was I had to leave my disconnect my phone from the Zoom. Now you can clearly see what I'm doing, right? This is how zoning works. You identify the trend, whether on a smaller time frame or higher time frame, doesn't matter. Change it to line chart and look for the pullbacks on that trend. If it's a uptrend, you know you should be expecting a pullback going down. Then you do what? You draw your what? Your zones like this. Now, how to enter and exit? You know this is a line chart, so you will not. I'm just showing you how you can use to identify your zones. Because by the time I change this thing I drew here to candlestick, you see how it reacts to it. So I just did it and I'm going to delete it now. So I will do it on a proper chart. Then you understand what I did. If you understand what I just did here, for those alone who said zoning, if you understand this diagram I did now, okay, just hold on. Let me do it on a live chat, so you can you put everything together well. Let me delete this. I'm still on GJ. We have Euro USD, we have gold, GBP AUD, and all that. Now I've identified that this GBP JPY H1 time frame is going on an uptrend. And now I need to know what's going to happen in the future. If I'm going to buy, I'm going to sell. Now, for you to identify your zone, how to draw your zone, you can see all these pullbacks, but you're not going to pick all the pullbacks. There are so many pullbacks here. But if you start picking all the pullbacks, your whole chart will be filled with rectangles. So what you would do, zoom out, just like this. You can see that I zoomed out. Pick your rectangle. You can see look at the pullback. The first pullback, the current pullback on the chart, which is this one here, from here to here. The current pullback, that is the first pullback you're going to use your rectangle to identify. the current one, before you can now go to the past to see what happened. Now you can see from here to this place. Then you draw it down to your desired point. Now, if I change this to candlestick, you will see how price respected. You can see broke it. This candle retested it. So for this strategy, I will buy it because price has closed above my what zone. I'm going to buy it to the next zone. I'm going to teach you how to identify the next zone using the previous where market has been to in the past. But for now, let's identify how to draw all your zones. So I'll change it back to candlestick. So we've drawn this, the first pullback. Now you can see that all this other pullback here is still within the zone that I drew here. This pullback here, this is another pullback, is still within the zone, so I'm not going to use that. Now you look for another pullback, which is this one here, from here to this place. This is another pullback from here to here. So I'm going to pick my rectangle and draw my zone like this. You see that I'm combining it with rectangle with my rectangle. I did not move any rectangle here. I didn't move my rectangle strategy. I'm still playing, the lines are still there. I've not touched it. Now I've identified another pullback here. If I change this thing to candlestick, you will see that price broke out of this, retested it, and now what will happen is to buy to the next zone. What zoning helps you to do, it mitigates those, it helps you to identify the next level where price is going to get to and stop. Imagine rectangle strategy is on a larger scale, but zoning is on a smaller scale because you can see everything, all the noise, all the interaction in the market. Zoning is going to capture everything for you because all these pullbacks you are seeing here, all this reaction you are seeing in the market here is based on what the pullbacks that have happened. So if you capture all those things, you know that you cannot take a trade inside a zone. You wait for the trade to break out of the zone, retest on the zone before you do what? You buy or sell to any part. Now I've changed it again. This is another zone I'm identifying here, which is this one here. I know you can't learn everything today, but with practice, you understand how the thing works. Now let's for paraventure, this trade decide to start selling and it hits your what? Your stop loss. If you want to enter a sell on this trade now, if you want to enter a sell on this trade, you have to wait for price to do this. Break out of this zone, retest it, then you sell like this. That's how you sell this pair. Even if you see a drop like this, wait for it to break out of the zone. Wait for a retest on the zone, then you do what? You sell. Now, the same thing happened for the buy here. You saw that there's a breakout. This bullish candle did the breakout. That bearish candle did the retest. So I'm expecting this candle to do what? Go up. So if market opened while we are still doing this chart, there's a tendency that the gap I'm expecting will go up to this place, because every time that there's a new year, there's always a very big gap in the market. So I don't know what's going to happen here, but we need to see. It's either the market will go up or the market will still respect the structure of this double top here and gap down to the next zone. That's why I told everybody last week, make sure you close anything that you're doing, close it, because you cannot tell where the market is going to get to. Give me 1 minute. Sorry about that. So you understand what I mean? It's either price will respect this double top you're seeing here, gap down to this zone, or continue the normal way. Because if this was not a new year, let's assume it is a normal trading. As market open, I will tell everybody enter and start execution, because it has given me what? The indication to buy. This candle broke it. This bearish candle retested it, then closed above my zone. So what am I going to do is to buy to my next zone. So how will I know my next zone? Is what has happened in the past. This, let me, if I change this to line charts, my next zone will be somewhere around this area. Because you have to do or check what has happened in the past, or you use your normal, or if you are combining it with this strategy that I did that is here, your next zone will be on this pivot level, which is 141.62 level. If you're going to combine zoning and rectangle strategy together. But if it's not going to be too much for you, you can just calculate the number of pips that you want to take out of the market and you leave the market. If this was a normal class without a new year and new rules that's going to happen in the market, nobody knows. As soon as market opens, this is a confirmation for a buy to the next level, to anywhere you're going to. But I would advise, don't enter any trade today. As soon as the market opens, let's see what is going to happen. Then by the time the market, as I said, my trading starts second week in January. So this first week is to allow the market to normalize. Everything the market should just go down, because there are so many things that will be happening. So many new accounts in the banks. They will start seeing what they're going to do, how inflows will come to the banks. So many economy will start looking for what they are going to use to bring money to the economy, and different kind of thing. Coronavirus is still on, so we don't know how it's going to affect. Is the vaccine good? Is the vaccine helping others? Because there are so many news that people are falling sick after taking the vaccine. All those things is going to affect the market. It's going to affect dollars. It's going to affect pounds. There's Brexit. Brexit as well is going to affect it. Somebody was asking me, how does Brexit affect the currency? Yes, if it's not going to favor the pound sterling will drop. If it's going to favor the pound sterling will do what? Will go up. So all these things are things that affect the market. You don't just jump into the market. You need to be very, very have an idea of what the current affairs is. Yes, US election too. You saw what happened. We made so much money during this US election. There was a gap. There was a long candle on gold that gave us over 1,000 pips. For those who started, who were with us when there was US election, we made so much money from it. So these are the things that you need to be aware of that affects the market. If you know you love a particular pair, like Australian dollars, you need to know that in Australia, the thing that they have very well there is tourism. So during this period that people are going there, you can see that the Australian dollars will be very high, because people are going there for their tourist center. If you see GJ has been dropping. People are booking so many hotels. You can see the drop, because people are planning to travel, so they are booking their hotels and all that. You can see GJ here, the way it's dropping and everything. But by the time holiday is over, everybody's going back to their country. These are the things. They need to be aware of what's happening in the world if you want to be trading in the forex market. That's why I prefer gold, because gold is safe haven for every currency, for every investor. If they see that an economy is going bad, what they do is they take their money and buy gold, because no matter what it is, gold's value does not depreciate. You can't buy gold at 14,000 and you go and sell it. You want to sell it at 13,000. You will keep it, to still appreciate, and you sell your money. That's what I'm explaining to you. That's why I prefer gold. But if you have any particular pair that you love, always go to that country and know what boosts the country. Is it economy? Is it tourism? Is it oil? You look for something that and study more about it. It will help you in your trading analysis. It's not just looking at technical, even fundamentals moves the market as well. It's not just trade, it's not just technical, fundamental to move the market. So you need to be aware of all these things. So for those who picked zoning, I'm sure do you understand how I got my zones? Let me explain it again. Sorry, I'm on GJ. How to get to your zone. You zoom out your charts, change to line charts, identify all the pullbacks and draw your what? Your rectangle on each pullbacks. That will help you identify where price has been to before and where price is going to react to. Price is going to do what? Break out of your zone, retest it, and go up, just like what I did here, as you're saying here, and what I did by drawing on the chart. For those who click on zone, please, what is the time frame for? You can use any time frame for zoning, any time frame, 15 minutes, 30 minutes, but me, I just use 1 hour. I prefer using 1 hour for it. My own preference for time frame is 1 hour. That's what I use. So I believe there's no question. Now let's go to GJ. I've already drawn my rectangle. Okay, you remember what I said about identifying your impulse move. Now you can see this impulse move I identified from here to here. Price has broken above it. That was why I had to copy this box and place it above here. So if price respect this trend line and bounce back to this level, sell to this level, I'm expecting price to do this as market open. Drop down back here. This is now the new support, and buy up to this place. So this is what I'm expecting if market does what? Open. Market will drop down to this pivot level of 1.34892. That is more than 100 pips. More than 100 pips. You know, this is GJ. This is pounds. Sorry, pounds have larger what? Pips. Let me reset this chart. Okay. So this is what I'm expecting that will happen. Price will drop and do what? Go up. And this drop you're seeing here is not just minimal drop. It's a big drop because the pounds pair. So, but the market will determine, this will give you about 157 pips. Or it will drop about 100 pips before it goes up. Because it has broken, price has broken up on this level. So imagine you saw this breakout that happened here. This bullish candle broke this, and this bearish candle, you can see how it closed exactly on top of my pivot level. So what I'm going to do is take my buy to the next level. So if I had taken this buy here, I would be in how many pips profit? Let me use this position. So imagine I entered from here. This would have been my, I would just be risking 22 pips to gain over 100 and something pips if I'm going to the next level. 22 pips if I'm going to the next pivot level, 22 pips to 400 and something pips. You see the beauty. You know what? How I do my own. The next, after the close of the candle, the next one, that is where my stop loss is. So I'll just risk less than 50 pips to gain 500 and something pips. Or if you still choose not to be, you still choose to allow the market to breathe, go to the next low. This is the next low here, this one here. So you are risking 68 pips to gain 474 pips. That's still a good one. That's 6:9. It's still very good. So that's how rectangle strategy works. But I said I was going to use I've already marked up my charts for, these are the charts. So for GBP USD, I won't take any trade this week. I will just watch the market to see if there are going to be gaps and how the market will move. It depends on what the market does that will make me to take the trade. But as of today, what I'm expecting, this move has already shown me a breakout and retest. So there's a possibility that there may not be another retest. You can see that this one already happened. This was the first breakout. This was a retest, and now this. So if the gap doesn't take the market to where I'm expecting it by dropping down, there's a tendency the price can just gap up and come to this level. But in all indication here, GJ and GU is on an uptrend. It's still going up. GU is still going what? Up. But before I can sell this pair, I have to wait for price to close below this pivot level. Price will close below this pivot. That's why I'm expecting a breakout like this, a retest, then what? Drop. If I will sell this pair. But from the look of this thing, the pair is on the upside. It's going up. That is for GU. So GU is still on the bullish trend, and I'm still my bias for GU is up. Euro USD. Looking at it alone, you don't need to tell that the pair is due was going up, is on an uptrend. This was the zoning we drew some time ago. You can see how price closed up below my zone. So what am I going to do? Sell to the next zone. But since the market is like this, price is what? This zone here is now a support level for me. So if the market opens, two things is going to happen. Price goes up back to this zone, or price does what? Break this zone, retest it before I can take the sell. But from what we're looking at, price is sitting on a support level. So there's every indication that it's still going on an uptrend. Price is still going on an uptrend. So price is still going on an uptrend. That is what's happening. Price is still going on an uptrend. So for EU, my bias is still up. But note, do not enter any trade today. Wait to see what happens in the markets. Let all the reaction happen. Do not enter any trade today. Just watch the market and see what's going to happen. But for this, since it's sitting on the support, remember the trend is the stuff is buy on a support, sell on a resistance. So you cannot enter this trade for a sell. If you feel that this is going to sell, wait for more confirmation before you sell it. For me, I will wait for this to happen. Let me go on H1. This is on H4 safe. You can, okay, you see why I prefer H1. Now let me show you something. See, this is H4. You see that if you wait for this to happen, you might not take this sell because you said that this bullish candle closed inside this. You might be contemplating on this, but let's go to H1. See what happened. This is a clean break and this is a retest. This one is a retest. So imagine you entered a sell here. You will sell to the next zone and you're out of the market. That's how many pips? 67 pips. If you for the sell, for the stop loss of a zone, is your stop loss is above what? The zone. Above your zone. So every stop loss will be above this. If you are selling, if you are buying, your stop loss will be below the zone. So now I take my sell from here, my stop loss is up here, and my take profit is on this zone. So if I had entered this trade, I would have exited the market in good profit before what? The market closed for the day. So that's the difference between using rectangle strategy and zoning. Rectangle strategy is on 4 hours. Zoning, you can use any time frame, 15 minutes. It works for any time frame, but I prefer to use it on what? 1 hour. So looking at this 1 hour chart, two things I'm expecting: to buy this pair because it's now on the support here. Even if it drops like this, I'll wait for something like this before I confirm my sell. But from a look at it, it's still on my support area. So Euro USD is bullish for me. GA, according to rectangle strategy, you will wait for what this candle to close. Now, this bearish candle, this bullish candle here broke my pivot level to indicate for a buy opportunity. But I will not buy this opportunity until the next 4 hours candle closes. So if this next 4-hour candle closes above my pivot level that you're seeing here, what am I going to do to GA? I'm going to do what? Buy it. But if it doesn't, if it closes below my pivot level, I will wait for what? The next 4 hours candle to close, then I will sell down. I will sell it down. But from looking at everything you are seeing here, the trend is coming downwards. I've not even drawn my pivot. Sorry. You can see it's forming an M here, but based on what we just saw using the rectangle strategy, price broke my pivot level to the upside. It has given me my antenna to be aware that, okay, there is a bullish movement here. But for me to enter this trade, I need to wait. If you choose to go as soon as market open, you enter this trade and it drops down. Remember, this is what? Pounds per. From here to here, it's about 90 something pips. Let's count it. So you do a drawdown of 90 something pips, which is very poor, very bad for any trader when you don't wait for your confirmation. So let's say, okay, 65 pips. So instead of me to be waiting 65 pips in drawdown, why don't I wait, let the price do what? Go down and close above my pivot level before I buy. So these are the things you need to look out before you enter. Using rectangle strategy, you have to be patient. Exactly what I said. You have to be very, very patient before you take this trade. So for me on GU, I don't have anything until the last candle closes before I'll indicate either buying or selling. But for this, I will wait. This one, you will do what? Wait. Wait for more confirmation. Wait for more confirmations. So if these 4 H4 candles close, that will determine what I'm going to do with GA. Then the last but not the least, gold. I've always been bullish on gold, and I'm still bullish. My bias has not stopped. I'm still bullish on gold. You can see the markup I had since. We sold this pair and we bought it somewhere around here. We also bought it around here. Some people bought it around here because I've stopped trading by then. So even adding my zone to it, price is still what? Showing me an indication to do what? Keep buying gold. So gold for me is still going to buy up to what? 1967, 2000. Gold is still going to the upside. It's not coming down any soon according to my analysis. If you can see on the rectangle strategy, is above my pivot level, almost going to 1930. So on my demo account, I think there's one demo account. Where's that demo account? I think it's this. I bought gold and my TP is 1930. So I'm expecting gold to get to 1930 on that demo account. So this is my bias on gold. I've not changed it since. Gold is still on an uptrend. But like I said, we'll wait and see what happens in the market. You see how beautiful this rectangle strategy is. Wait for break and close, you buy and out, you keep buying and you leave the market. Any question? Any question? If there's any question, please type on the chat box. So if you understand it, type 777 on the chat box. If you understand everything I did, type 777 on the chat box. Yes, someone talked about trading journal. He doesn't understand the trading journal. Yes, you see, he didn't even, is he on the call? The person that asked in the group that he doesn't understand how to use the trading journal. Okay, 777, good. So no question. I think according to Konzi, if I was his lecturer in school, he'll come out of his class. Okay, this is how the trading journal works. Remember I said I'm starting my account with $20. So where you have the deposit, the balance, you click 20. This is just me. This is for me. $20. So let's assume that, okay, Oluwa, yes, that's what I want to explain. Now this is how the trading journal works. The day one, these are days. Day one, day two, it could be week. You can use it as week, you can use it as day, depends on you. The balance is what you have in your account. The daily growth is a percentage of what you want to achieve every day or every week. This is the daily profit goal. Then this is a TP. If you are going for 30 pips, your stop loss should be between 15 to 20 pips. That means you need to master your what? Skill, your entry skill and your exit skill. So if you must use 30 pips and 15 pips, that means you leave rectangle strategy and you go for zoning strategy and use, what's it called? Either zoning or EMA crossing. I taught EMA crossing last week. So go to EMA crossing is solely for scalpers. So if you want to just go stay in the market for 20, 30 pips, go back to the class I taught using the crossing. I might do a recap a bit for it so you can understand how it works. Then if you're going for 50 pips, your stop loss should be between 20 to 25 pips. If you're going for 100 pips, your stop loss should be between 25 to 30 pips. So you need to have a very good entry point before you think of using this trading journal. Now let's assume you started with $20 and your daily growth is what? 10% every day. Meaning if you do $2 by tomorrow, Monday, you achieve $2 using 0.01 lot size, you do what? You close trading for that particular day. You close your trading journal for that particular day. So if you are using the next day, you now have 20 what? $2. If you do $2 again, by Tuesday, you have $24. If you do $2.42, you're having $26. So this trading helps you to manage your account. You don't have to do what? Keep trading up and on every particular time. Now, this is what? A 30 days plan. By day 30, which is this place, you must have done how much in your account? $238 will be in your account by day 30 if you are disciplined. But if you are not disciplined, you are going to do what? Lose everything by day 30. Sorry, this is even 26. Day 30, sorry. Here, you might have gotten $348 in your account. You know, we started with $20. We started with $20. So you've gotten what? $348. Now this is 60. By day 60, if you are consistent, you know you are compounding this thing, you will have in your account $4,159. Remember, we started with what? $20. Look at all the lot sizes here. You will start with 0.01. This trading journal gives you the number of pips that you're going to use. You can see it as the pips increase and the entries, you can see everything, the way it's increasing there. That doesn't mean you cannot lose. You can actually lose that day. That's why I said, before you can use the trading journal, make sure you've chosen the strategy you want to use. You've chosen the number of pips that you want to go. You have to be patient and very disciplined with it. If you can be disciplined with this thing, trust me, by day 60, if you start with your $20 or any amount, by day 60, which is this one I'm showing you here, you will have $5,536 in your account. All what you need for you to do is just be disciplined. I'll do a recap for EMA crossing. For those who don't want to stay long, you just want 30 pips and you're out of the market. So that's how this thing works. Then here is where you can actually put how much you made every day. You type it yourself. So let's say day one, your daily growth is supposed to be $2. If you do $2.30, you just type $2.30. You know, sometimes broker will just help you. Tomorrow, the other day, if you do it automatically, to just change to dollars. If you do $2.50, $2.50. The same thing happens like that. If you do $3, it happens like that. You just keep doing it that way, and you'll be putting all the stuffs together. So that's how the trading journal works. Okay, it has given you the number of pips, the number of your lot size. It tells you the lot size you're going to use and every other thing that you're going to use. So even if you have more than $20, you just come to balance here, change it. If you have $200, you add it $200. If it's 10% you want to do every time, just use anything. If you don't want, if 10% is too much for you, change it to 2%. Anything you want to do. But look for the one that you're going to be consistent. Look for the one you're going to be consistent. Consistency is key. If it's 2%, use 2%. By the end of the 30 days, you've gotten how much? 30 days, you've gotten what? 334. 60 days, you've gotten how much? 600 and this. It's not about putting 10%. It's about being consistent with it. So anyone you're putting, if it's 1%, 2%, be consistent with it. You don't connect your trading journal with your NT4. This one is on your own Excel. This is an Excel sheet. This is where you jot down all your growth for you to monitor how your trading is. There's nothing that concerns MT4 here. What happens is that when you trade on your MT4, you come here and put what you've done. How you connect with your MT4 is that if you have $200 account and you want to be doing 2% growth, by the time you trade on your MT4 and you've made $4, close your MT4 for that day and wait for the next day. That's how you connect it. It's not that you can't connect your Excel file to your MT4. It doesn't work that way. So now the EMA crossing, you see I hid it. I don't like using indicators. EMA crossing, you use it on what? 15 minutes. Let me go to GBP USD. 15 minutes EMA. I'll just do a recap because we've taken long here. So let me open my EMA. Okay. I'm sure everybody understood how the trading journal works. Okay, good. Now, the EMA crossing is very simple. The moving averages that we use for the EMA crossing is exponential moving average. You can use it on your phone. Exponential moving average 14 range, exponential moving average 50, and exponential moving average 200. Before you can enter any trade, you have to wait for a crossing to happen. And the crossing that will happen is for 14 to cross 50, either upward for you to buy or downwards for you to do what? Sell. But the first thing you need to check is you go to your H4 and check where your 200 EMA is. Why I ask you to do that is if your 200 EMA is below price, it tells you that the price is going on an upward trend. If your 200 EMA is above price, it tells you that price is on a downward trend. The reason why you need the H4 is for you to know where you are scalping. It's always good to be on the trend. Now you have an idea that price is going on an upward trend. That is only what you need the 4 hours here using this EMA crossing. It's just for you to know where the 200 EMA is placed. And as you can see here, it's placed below price here, showing me that price is doing what? Going on an upward movement. So I'll come back to my 15 minutes and look for bullish opportunities. Now the bullish opportunity is 14 is the blue one, 50 is the red one, and black is the 200 EMA. So for me to enter any bullish opportunity here, I will wait for 14 to cross 50, just like what we are seeing here. You must wait for a crossing to happen. This is where the crossing happened here. This place here, you can all see it. The crossing has happened here. Price closed above it. You do what? You buy. But now price is below what? Because you remember this is 15 minutes. Our 4 hours has told us that price is what? On an upward trend. So what I'm going to do is do my what? Look for bullish opportunities. And remember I told you that this is just for scalping. So you don't stay long in this market. You just stay for your 30. So if you're using your trading journal and you're going for 30 pips, as soon as you've seen your crossing that has happened on the trend, wait for price to hit you or your level. If you are doing 30 pips, know that your stop loss will be what? 15 to 20 pips. Remember what the 30 pips, your stop loss will be 15 to 20 pips. So if you are doing 30 and 20, remember what the journal said. So you should look for just 30 pips and you leave the market. So this crossing happened here. The crossing has happened here. You enter, let's assume you entered from here. So you go for 30 pips. 30 pips is somewhere around here. And you're out of the market. But number one thing you should have in mind is to wait to check where the 200 EMA is on the what? 4 hours time frame. The 4 hour time frame, you tell us the direction that we need to go. But be on a better platform, even if you don't want to enter at the crossing because the 200 is still above it, you can still wait when price is above the 215 minutes. You enter your buy and you go what? Upward. Sorry, let me take this call. You wait for price to do what? Close above it and you enter your buy. You take your 30 pips and you leave the market. Even if price does the same thing here, there's crossing has happened, price is above your 14 EMA, you wait for your 30 pips, get your 30 pips and you leave the market. You get your 30 pips and you go for the market, leave the market. And for you to have these 30 pips, you look for pairs that give you these pips longer, like GBP pairs or Euro USD or AUD USD. But I prefer GBP pairs because they go faster and deliver faster and you close for that particular day. So always what you want to do is make sure you trade with your stop loss. Don't ever trade without your what? Your stop loss. It will help you to manage your risks in your trading. For those who said about the crossing, hope you understand the crossing better now. It's just a scalping trade. You wait for market to cross, you enter, you measure your stop loss, and that is it. Take your number of pips. You're not staying long in the market. It's a scalping strategy, and you're out of the market. Or the other thing you need to know is where the 200 EMA is on the 4 hours time frame. If it's above, you know that you should be looking for sell opportunities in 15 minutes. Why I want you to do it that way, it should be easy so you will not be against the trend because it's scalping. So you won't be against the trend. Any other question before Matt? Matt, you can stop sharing, please. Mr. Matt, are you still on the call? Not sharing. You can stop recording. Okay. So any